Overall, portfolio performance has been strong year to date and over the past 12 months, as all portfolios have posted positive absolute returns. Equity returns have been the primary driver of portfolio performance, being led by U.S. equities, but also solid returns from Canadian, international, and emerging market equities. Interest rates have been on the rise in Canada and the United States over the past 12 months. Rising interest rates are bad for bond prices and tend to be bad for interest rate sensitive stocks as well. In other words, higher dividend paying stocks. Higher dividend paying stocks tend to be within the utilities, telecom, and consumer staple sectors. And all three sectors, not surprisingly, have underperformed the benchmark over the past 12 months. The MDPIM Dividend Pool and MD Dividend Growth Fund are overweight these higher dividend paying sectors, and that allocation has detracted from benchmark relative performance. However, overall, both dividend mandates have outperformed the benchmark over the past 12 months due to a significant underweight to the materials sector. Canadian and U.S. equity markets have been driven by growth stocks. Emerging market equities, on the other hand, most recently have been driven by more value investing sectors such as energy and materials. In addition to the difference in return drivers, the return differential between U.S. equities and emerging market equities has been very significant over the past 12 months. The global context has always been a critical driver of EM assets. EM countries have many idiosyncratic issues, but it is this less benign backdrop that is exposing them. The major tailwinds of recent years, low U.S. inflation and Chinese economic stimulus, are not as prevalent as they once have been. Our MDPIM Emerging Markets Equity Pool has shown resiliency and strength over the past 3 months, as it has outperformed the MSCI Emerging Market Index by 1.85%. The main driver of benchmark relative returns over the past 3 months has been an underweight to Chinese equities and an overweight to Russian and Mexican equities. In addition, our unique and sophisticated dynamic currency strategy has also added value over this time.